Being poor is expensive. That sounds unfair, because it is. The strange part is that poverty does not only mean having less money, it often means paying more for the same basic life. A person with savings can buy time, options, and forgiveness. A person without savings often has to buy survival at emergency prices. This is sometimes called the poverty penalty, but that phrase almost sounds too polite for what it does. It shows up in bank fees, rent deposits, bad loans, broken cars, cheap shoes, late charges, and wasted hours. None of these things alone looks dramatic. Together, they quietly drain the people who already have the least margin. And the cruel joke is simple. The less room you have for mistakes, the more expensive every mistake becomes. This video is not about blaming poor people. It is about explaining the price structure around being broke. Because poverty is not just a low number in an account. It is a system of smaller doors, worse terms, and fewer second chances. Start with the most obvious example: cash flow. If you have money before you need it, life is cheaper. You can buy groceries in bulk, repair problems early, pay bills on time, and wait for a better deal. If you do not have money before you need it, everything becomes urgent, and urgency is where the world makes its profit. The washing machine breaks, the car fails, the child needs shoes, or rent is due tomorrow. A middle-class person may use savings. A poor person may use a payday loan, overdraft, pawn shop, or credit card. Same problem, different price tag. The emergency itself is bad. The emergency financing makes it worse. That is the first layer. Being poor means buying time at a very high interest rate. Now look at banking. Banks love stable customers because stable customers are easy to serve and easy to profit from. If your account is comfortable, the bank treats you like a relationship. If your account is empty, it treats you like a risk alert. A small overdraft can become a fee. A fee can make another payment fail. Then the system acts surprised when the spiral continues. It is almost comedy if it were not a cushion gets charged for not having a cushion. Some banks have improved these policies, and that is good. Fewer junk fees and clearer accounts genuinely help. But the larger pattern remains. Financial instability is often monetized as a product. Next comes credit. Credit is supposed to measure risk, but it also measures how much past instability you have survived. Missed payments, thin credit files, collections, and high balances can make borrowing more expensive for years. So the person who most needs affordable credit often gets the worst credit. Very elegant, very brutal.
A wealthy borrower may get a low rate because they have assets. A poor borrower may pay more because they have no proof of safety. The irony is obvious. The people with the least ability to absorb high interest are often offered the highest interest. That does not mean lenders are cartoon villains. Risk is real, defaults are real, and lending money is not charity. But when risk pricing meets poverty, it can turn temporary trouble into a long-term tax. That tax appears in car loans, credit cards, personal loans, rent-to-own furniture, and emergency financing. Now consider housing. Being poor often means paying more for less stability. A renter with weak credit may need larger deposits, extra fees, a cosigner, or may be pushed into worse housing. Moving itself is expensive. Application fees, deposits, trucks, lost work hours, and new setup costs all arrive at once. People with money can move strategically. People without money often move when something breaks. And when choices are limited, landlords do not need to offer the best value. They only need to offer the available option. This is where the market becomes polite on paper and ruthless in practice. Transportation adds another layer. A reliable car is expensive, but an unreliable car is somehow even more expensive. The cheap car costs less today, then charges interest in repairs, missed shifts, towing, stress, and bad timing. Public transportation can be cheaper, but only if it actually reaches the job, school, store, and doctor when you need it. When transportation fails, poverty charges again. Late fees, missed wages, lost opportunities, and another apology to someone with power. A richer person can pay for convenience. A poorer person often pays because convenience is unavailable. Food can work the same way. The cheapest calories are not always the cheapest health outcome. Buying in bulk, choosing better stores, and cooking ahead all require space, transport, time, and upfront cash. If your kitchen is small, your schedule is unstable, or the better store is far away, the cheaper option may not be available. People love saying, just make better choices, as if choices are floating freely in the air like discount coupons. Real choices require money, time, transport, storage, and energy. Poverty removes those first. Then there is the cheap stuff trap. Low-quality products cost less at the register and more over time. Cheap shoes wear out. Cheap furniture breaks. Cheap appliances fail. Cheap tools need replacing. A person with money buys once. A person without money may buy the same thing 3 times badly. This is not stupidity. It is cash flow forcing short-term decisions.
The expensive version is often cheaper in the long run, but the long run has an entrance fee. Healthcare is another example, even when the details vary by country. Delaying care can turn small problems into expensive problems. People with money can take time off, get checked early, travel for better care, and pay before the problem grows. People with less money may wait because missing work, transport, co-pays, or childcare make treatment costly before treatment even starts. Then the untreated problem becomes bigger. Poverty charges interest on the body, too. Work itself can carry poverty costs. Unstable schedules make planning harder and punish small disruptions. If your hours change every week, it is harder to plan childcare, meals, transport, sleep, and side income. The system praises flexibility when companies want it, then punishes workers for living inside that flexibility. Late to work because the bus failed? That is your problem. Need a schedule early? Maybe next week. Time becomes another currency. The poor often pay with hours because they cannot pay with money. Waiting rooms, long commutes, customer service lines, public offices, cheap shipping, slower repairs, and second trips all cost time. And time is not free just because no one hands you a receipt. Now add status. Being poor also means being trusted less by default. A richer customer may be assumed responsible. A poorer customer may be asked for proof, deposits, guarantees, and extra verification. That suspicion has a cost. It slows access and often adds money barriers to basic services. Security deposits are the perfect symbol. If you have less money, the world asks you to lock up more of it just to participate. To be fair, businesses use deposits because damage, non-payment, and fraud are real. The good side is that rules can protect providers and other customers. But the same rules can squeeze honest people who are already short on cash. Insurance also prices the world through risk. Sometimes that is rational, sometimes it feels like getting billed for your zip code. Poorer neighborhoods may face higher costs, worse services, fewer options, or more friction in the same basic transaction. So poverty becomes geographical. Your address can quietly change prices, assumptions, and opportunities. The internet has made some things cheaper, but it also created new paywalls. Better deals often require time, research, accounts, and upfront payment. Subscriptions, delivery fees, banking apps, discount codes, reward programs, and credit card points all reward people who can manage complexity. Rich people outsource complexity. Middle-class people optimize it. Poor people are often too tired surviving it. That does not mean poor people are helpless. Many are extremely skilled at stretching money, negotiating, repairing, and improvising.
But skill is not the same as power. You can be smart and still be trapped in expensive conditions. This is the part people misunderstand. Poverty is not simply a lack of discipline. It is a lack of buffer. A buffer changes everything. It lets you wait, say no, repair early, buy better, avoid fees, and choose slower but cheaper paths. Without a buffer, every small shock becomes a negotiation with a more powerful system. And those systems are not always evil. Banks, landlords, insurers, stores, and lenders all solve real problems too. The issue is that their safest, cheapest, friendliest versions are usually reserved for people who already look safe. So the system keeps asking poor people to prove they are low risk while charging them high-risk prices. That is why being poor can feel like running uphill while paying a toll at every step.
The solution is not one magic habit or one motivational quote. Please, the budget planner alone is not defeating a rent crisis. But some individual moves do help. Avoid the worst debt traps, build even a tiny emergency buffer, protect credit, and reduce recurring fees where possible. Community help can matter too. Shared transport, buy-in groups, trusted childcare, local repair networks, and honest financial education. Policy also matters. Better banking rules, fairer fees, safer small-dollar credit, housing supply, transit, and healthcare access can reduce poverty penalties. The point is not to remove responsibility from people. It is to stop pretending the playing field charges everyone the same entry fee. Because the middle-class version of life often comes with discounts, lower rates, better stores, cheaper insurance, and more flexible deadlines. The wealthy version comes with even more: advisors, leverage, bulk pricing, legal help, tax strategy, and private access. The poor version comes with urgency, suspicion, fees, deposits, delays, and punishment for being one paycheck late. That is why the phrase, "being poor is expensive," is not just a complaint. It is a map of how money systems work. Once you see it, you notice the same pattern everywhere. The people with the least money often pay the highest price for normal life. And that is the final irony. Poverty is treated like a personal failure, while the system quietly invoices people for having less room to fail. Being poor is expensive because the world sells stability at discount to people who already have it. And if that sounds absurd, that is because it is. The price of being broke is one of the most hidden taxes in modern life.